Hello folks, in this video you will hear about the different types of asset classes and then we will proceed to discuss about building a stock portfolio worth rupees 1 lakh for beginners.
I'm Dr. Krish. Welcome to our channel Krishdom Investor. Here you get timely, quality and unbiased opinion on the stocks and investment opportunities.
Investing is the process of putting your money into something with the hope that it will grow over time. There are many different asset classes for investment, and each one has its own benefits and risks. One can invest in stocks, bonds, ETFs, mutual funds, forex or real estate. Stocks are the most common type of investments. They represent shares in a company and the value of the stock goes up or down based on how well the company is doing financially. They are considered to be the most volatile, but they also have the potential for the highest returns. Bonds are not as volatile as stocks, but they offer a fixed interest rate for a set period of time. ETFs are mutual funds that track an index such as the Nifty, Sensex index, etc. and cost less to own than individual stocks do because you don't have to pay commissions every time you buy or sell them. Mutual funds are similar to ETFs, but they usually have more than one stock in them, so you can diversify your risk across several companies at once. The next step is to decide how much money you want to invest and how long you want to invest for. After deciding on the amount of time and amount of money that you want to invest, it's time to compare the different asset classes. Here, a detailed comparison of asset classes is out of the scope of this video. In these pandemic times and as social security is becoming increasingly important, term insurance policies are being viewed as a dynamic asset to protect your own finances. I believe most of you have subscribed to the insurance policies in this uncertain pandemic time. If not, let me present to you the exciting term insurance options available with the Policybazaar. Here, term insurance is a type of insurance policy that provides coverage to the policyholder for a certain term of years. Suppose the policyholder met with something really unfortunate when the insurance was active. A lump sum monetary benefit is to be paid to the nominees of the insured policyholder. Why should one go for term insurance? Life is uncertain and people go into deep crisis when they least expect it. It is wise to have yourself covered with a term insurance that answers the question, what happens to my family if I am not around? You need to create an emergency fund. I know many people who don't take things seriously and then go into financial problems when something unfortunate happens. Now, what is this emergency fund and why do you need it? As the name suggests, when there's an emergency, God forbid, something happens, like you lost your job or someone has to be hospitalized for some reason, you need to be able to run the show during that crisis, at least till you get back your job or things get normalized. For this, you need to at least have 3 to 5 lakhs in your bank account or in an FD, so you can withdraw this fund immediately if anything happens. Or the safest way is to get yourself and your family insured. You see, insurance is a form of an emergency fund. It kind of makes your financial life immune to unpredictable events. Can be an accident, can be an injury, an illness or even death. Hence, I advise you to get a term insurance for the safety of you and your family through Policybazaar. Now, we have to keep in mind a few things before getting the policy. How much cover to buy? It's 20 times your annual salary. If your annual salary is 5 lakhs, then minimum 1 crore is covered. It's always advisable to buy a cover as high as possible. On Policybazaar, you can compare and buy from 20 plus insurers. It helped me choose the best plan for my family cause I call them and they suggest me the best option out of all considering my requirement and my income and expenses. Also, I paid the lowest premium with a high sum insured. You literally have a 1 crore plan starting at rupees 490 per month. The reason being Policybazaar is a listed company who's quite big in the market. They are directly in touch with insurance companies and do not charge any extra commission like agents do. You may get the same plan with extra premium if you go directly via some agent of a bank or insurance company. You also get an online discount of 5.5% which only Policybazaar would offer you directly. Not to mention the 24/7 claim assistance from Policybazaar. You don't need to call anyone else, nor the insurance company nor the hospital. Just call Policybazaar. They become your one-point contact and they will help you out completely to get your assured sum when you want to claim it. They literally set up a new department for settling claims since the pandemic. You also get a coverage for up to 80 years that's like lifetime coverage which guarantees your nominee the money when you are no longer there. You get term plans that cover up to 59 critical illnesses with help of the critical illness rider option. Now you don't only pay money but also get tax benefits on the purchase of term insurance. You get tax exemption up to 1.5 lakhs under Section 80C of the Income Tax Act. Anyway, Once you have secured yourself and your family with good term insurance, do create an emergency fund that I have spoken about before. Now you can see the amount of benefits Policybazaar has to offer us. Hence, I would like to recommend all of you to buy the term insurance policy. Do check out Policybazaar and get the best insurance policy. I have provided the link in the description. So let us move to learn how I will build a stock portfolio for beginners. Here, beginners should understand that a stock portfolio is a collection of stocks that an investor owns. A stock portfolio consists of stocks from different companies, industries, and sectors. The goal of a portfolio is to balance the risk and return of the investments in order to maximize profits. There are many reasons to build a stock portfolio: to diversify risk, to get higher returns, to get better quality dividends, to make it easier to manage your investments, or for tax purposes. How to create a portfolio? Let's see. The first step in creating your own stock portfolio is to decide on the amount you are willing to invest and how much risk you are willing to take on. You need to think about what types of investments will be best for your goals, how long you plan on investing, and how much time you can dedicate to researching each investment. There are many factors that go into creating a successful stock portfolio. The foremost thing to consider is what type of investor you are. Are you investing for retirement? Do you want your investments to grow quickly? Do you have a long-term horizon? These are all important questions when it comes to picking stocks for your portfolio. The next thing to consider when building your portfolio is diversification. This means spreading out your investments across different sectors, industries, and geographies, so that if one sector or industry takes a hit, it won't affect the entire value of your portfolio. Moving ahead, the two most important factors in determining the success of a stock portfolio are the stocks themselves and the timing of their purchase. It's important to keep in mind that there are different types of stocks: large cap, small cap, mid cap, penny, which all have different risk profiles. There are many reasons why you should allocate funds to all types of stocks, such as large cap, mid cap, small cap, and penny stocks. One of them is the ability to diversify your portfolio by investing in all the segments of the market, which is important for investors with a long-term horizon. There are other considerations too: market timing, company growth rates, industry sector performance, and more. Assuming that we have decided to invest 1 lakh. How will I invest this fund in stocks? In the current market scenario, I will allocate 40% of my 1 lakh, that is 40,000, in large cap stocks with market cap over 1 lakh crores, 20%, that is 20,000 rupees, in mid cap stocks with a market cap over 20,000 crores, another 20%, that is 20,000, in small cap stocks, and 10%, that is 10,000 rupees, in penny stocks less than rupees 20 per share. With such an allocation, I'll pick the stocks in each category as follows. In the category of large cap stocks, I will invest 20,000 each in Reliance Industries and SAIL, Steel Authority of India. In the category of mid cap stocks, I will invest 20,000 in Canara Bank. In the category of small cap stocks, I will invest 20,000 in Dhampur Sugars. In the category of penny stocks, I will invest rupees 10,000 in GTN Textiles. This portfolio is intended to give high returns in the next 6 quarters. I term this portfolio as a growth portfolio. Let's see how it performs in the next 6 quarters. Happy wealth creation. Don't forget to like the video and subscribe to the channel. If you are interested in members only posts, please do subscribe to the channel membership. See you again. Do check out Policybazaar and get the best insurance policy. I have provided the link in the description.